Every generation believes it has discovered a new kind of financial scandal, a new company, a new technology, a new opportunity. But history tells a different story. Bernie Madoff, Enron, Theranos, FTX, Wirecard, Lehman Brothers. At first glance, they have almost nothing in common. Different countries, different industries, different decades, different people. So why do they all end the same way? Because billion-dollar scams aren't built on money. They're built on belief. And belief follows a pattern. Once you learn to recognize that pattern, you stop asking, who committed the fraud? And start asking, why did so many intelligent people believe it? That's the question we're investigating today. Most people think financial scams begin with greed. They don't. They begin with hope. Nobody invests expecting to lose money. People invest because they believe they've found an opportunity. Charles Ponzi understood that better than almost anyone. He wasn't selling postal coupons. He was selling the possibility of a better future. A simple promise. 50% returns in just 45 days. The investment itself wasn't the product. Hope was. That pattern hasn't changed in more than a century. Every major financial scandal begins with the same emotional trigger. A better investment. A revolutionary technology. A once-in-a-lifetime opportunity. Before anyone believes the numbers, they believe the future being promised. Because hope lowers our defenses long before deception ever begins. Hope alone isn't enough. People also need a story. And great financial scams never sell products. They sell narratives. Theranos didn't ask investors to believe in a blood testing machine. It asked them to believe they were witnessing the future of medicine. That's a much more powerful idea. Because stories do something numbers can't. They create meaning. Once people fall in love with a narrative, evidence quietly becomes less important. Questions become interruptions. Critics become pessimists. And every success, no matter how small, feels like proof the story was true all along. That's why the most dangerous financial scams rarely look like obvious fraud. They look like the future. Hope opens the door. Stories invite people inside. But neither explains how billion-dollar scams become billion-dollar scams. For that, you need one ingredient every fraud eventually discovers. Other people. If hope opens the door, other people convince us to walk through it. Think about the last time you tried a new restaurant. Chances are, you didn't inspect the kitchen. You looked at the reviews, or the line outside. We naturally trust what other people appear to trust. Psychologists call this social proof. It's one of the most useful shortcuts our brains have. Most of the time, it saves us from making hundreds of decisions every day. But in finance, that same shortcut can become incredibly dangerous. Bernie Madoff didn't build trust through advertising. He built it through reputation. His investors saw successful business owners, celebrities, and respected financial professionals investing alongside them. If those people trusted Madoff, why shouldn't they? Without realizing it, they outsourced their own judgment. Instead of asking, have I verified this? They asked, who else believes it? That's the moment independent thinking quietly disappears. And the larger the crowd becomes, the safer the decision feels, even when the risk is growing. Now the blueprint becomes even more powerful. Because complexity has an unexpected effect. It doesn't just confuse people, it discourages questions. Imagine someone offers you two investments. The first takes 30 seconds to explain. The second requires an hour, 3 diagrams, and a glossary of financial terms. Which one feels more sophisticated? Most people instinctively choose the second. Not because they understand it, but because they assume complexity must be a sign of expertise. Enron understood this perfectly. Its financial statements became so complicated that very few people could explain how the company actually made money. That wasn't an accident. When something becomes difficult to understand, people often stop asking whether it makes sense. Instead, they assume they're simply not qualified to question it. And that's a dangerous shift. Because fraud doesn't always hide behind false numbers. Sometimes, it hides behind unnecessary complexity. The less people understand, the more they rely on trust. And the more trust replaces understanding, the easier deception becomes. By now, the blueprint has become surprisingly familiar. Hope, a compelling story, social proof, complexity. At this point, the scam doesn't need to convince people anymore. The market begins doing it for them. Because once everyone believes the future is already here, growth becomes the only thing anyone wants to see. By this point, the scam has stopped selling an opportunity. Now it's selling momentum. And momentum is incredibly persuasive. Because our brains have a dangerous habit. We mistake speed for certainty. When something grows quickly, we naturally assume it's doing something right. The faster a company expands, the safer it begins to feel. That's exactly what happened with FTX. Its valuation exploded. Major investors rushed to participate. Every funding round seemed to validate the previous one. Growth became the proof. Very few people stopped to ask a simple question. What's actually driving this growth? Because once momentum takes over, people stop evaluating the business. They start evaluating everyone else's excitement. Success becomes self-reinforcing. The company looks successful because people believe it's successful. And people believe it's successful because it looks successful. It's a powerful illusion, one that becomes stronger with every headline, every investment, and every new record. Here's the uncomfortable part. Most billion-dollar scams don't survive because everyone is asleep. They survive because for a while, almost everyone wins. Investors see rising portfolios. Executives receive bonuses. Banks generate fees. Governments celebrate economic growth. The media gets another success story. Even honest people have little reason to question what's happening. Because questioning success is uncomfortable. Imagine standing in a room where everyone is celebrating. Would you be the first person to interrupt the party? Probably not. Financial markets work the same way. As long as money keeps flowing, doubt becomes expensive. This is why major scandals rarely require a conspiracy. They only require aligned incentives. Thousands of people, each making decisions that seem perfectly reasonable on their own. Together, those decisions create a system where asking difficult questions becomes increasingly rare. Not because the truth is hidden, because the rewards for believing are immediate, and the cost of skepticism feels much higher. Then, someone asks for proof, a withdrawal request, an audit, a missed payment, a journalist's investigation, a simple question that can no longer be ignored. Every scam collapses differently, but almost every collapse begins the same way. Belief meets verification. Think about the pattern. Charles Ponzi couldn't pay everyone at once. Bernie Madoff couldn't survive massive withdrawals. Wirecard couldn't produce the money. Lehman Brothers couldn't restore confidence. Different events, the same turning point. For months, or even years, trust had replaced evidence. Now evidence returns, and trust disappears. That's why financial collapses often feel so sudden. Not because reality changes overnight. Reality was already there. What changes is what people are willing to believe. Once confidence breaks, momentum reverses, questions multiply, money leaves, and the same crowd that once rushed to get in, rushes to get out. Every scam ends with panic. But panic is never the cause. It's the consequence. By now, the pattern is complete. Hope, story, social proof, complexity, momentum, aligned incentives, collapse, 7 stages, repeated across generations, across industries, across technologies. But there's one final question, one that matters far more than understanding the past. If this blueprint has remained the same for more than 100 years, how do you recognize it before it happens again? At this point, you might be wondering, so how do I avoid becoming part of the next scandal? The answer isn't predicting the future. Nobody can do that. The answer is asking better questions. Most people hear an exciting investment and immediately ask, how much money could I make? That's the wrong question. The better question is, why do I believe this? Is it because you verified the evidence? Or because everyone else seems convinced? Are you investing in facts? Or borrowing someone else's confidence? Every billion-dollar scam depends on one thing. People who stop asking difficult questions. The moment curiosity disappears, risk quietly takes its place. Let's put everything together. Every major financial scam we've investigated followed the same blueprint. It begins with hope. Then comes a compelling story. Other people start believing. Complexity discourages questions. Momentum creates excitement. Success rewards belief. Verification disappears. Reality arrives. Collapse becomes inevitable. Different companies, different founders, different victims. The same human psychology. Again, and again, and again. That's why studying financial fraud isn't really about understanding criminals. It's about understanding ourselves. History rarely repeats itself exactly. Markets evolve. Technology evolves. The names change. The industries change. But human psychology moves much more slowly. That's why Charles Ponzi still matters. It's why Bernie Madoff wasn't the last. It's why new scandals continue appearing in industries that didn't even exist 10 years ago. Artificial intelligence, cryptocurrency, biotechnology, clean energy. The next billion-dollar scam won't look like the last one. It never does. But if history is any guide, it will follow the same blueprint. Every financial crime leaves behind two stories. The story everyone remembers, and the story the money tells. At Follow the Money Crimes, we investigate the second one, not because history is fascinating, but because patterns are useful. The next financial scandal is already being built somewhere. The question isn't whether it will happen. The question is, will we recognize the blueprint before everyone else? Every financial crime leaves a trail. Follow it.